So rather than looking at stop loss areas or the regular exit signals, why don't we switch over and look at fixed hold periods and compare, see how a longer hold period worked out rather than an exit signal.
Okay.
Right now you're showing 473 trades, average hold day of 28 days with a profit and loss of $2,579.
Okay. Yes. So yeah, instead of using that list of exit signals, we could just switch it over to use a defined period.
Let's try 20.
Okay. So I'll put 20 in here. I'll just rerun again the simulator.
Okay. Well, that gave us a pretty strong loss of $5,200.
And it changed the shape of this curve quite significantly too.
Yes, it did. Well, let's go up to 50. Why don't we go up to 40 or 50, and then let's change the market dates.
Okay, that's a good idea. So let's just quickly go 40 here, and okay, we've turned into a winning scenario.
Okay, and let's bump it up to 50.
Okay, and 50, and we are in more of a winning scenario. And now you have to also bear in mind this is during a down market and an up market.
So let's go to an up market. A lot of our strategy is timing the market. We want to be in the market when conditions are favorable. Sometimes it's really hard to do, but you can certainly figure out when a market is starting to trend. So why don't we go to the current or the recent bull market, I should say. We're in a correction period right now.
Okay. Well, the base low of the market was March, and so if we set it up from March 2009 to December, the end of that year, then that was truly a bull phase or a rally.
Okay, let's try that. Those are good dates to use. It's very recent.
Yeah. Well, changing it is quite easy. You just change the date in here, and then you can rerun to get new signals. So I'll rerun to get my new entry signals, and I'll switch over to the exits and get my new exit signals, and then go back to the simulator and run that again. And now we're looking.
Wow.
We are looking at a hold period of 50 days here.
Okay, well let's. And that's showing us a $10,000 profit. Average hold of 43 days on 100 trades. Why don't we go to the exit signals?
Okay, let's.
Unless you want to try, do you want to try some different hold periods?
Well, exit signals would be good. Let's do that quickly.
Let's do that. And see how they work.
It's very quick to change it. We changed it.
It cuts the profits in half. Number of trades are the same, and the average hold is 38 days. And
yeah. Now the number of trades will always be the same where we're switching between either using exit signals or a fixed hold period, because the thing that gets us into the trade is the entry signal, and we've not changed the entry signal.
Okay, well that makes sense.
So we can.
Now the shape of that graph has really changed dramatically. I mean, a lot more winners than losers.
Yeah, it's definitely definitely changed. So from the time when we were in both the down and the up market, now we're just looking at the rally period, and we have a lot more winners in that case than we do losers. Which people say keep trade with the market. You don't want to trade against the market, and this program will help you to see that is actually a reality. That's a true statement. You want to be on the long side when the market's rallying, and you want to be on the short side when it's falling.
Let's see what the best trade is there. It looks like right in the middle, up around 37%.
Yeah, and so it's two places you can see that. You can see it right here in the upper chart, and if we come down to the lower chart, you can see this candle here hits at it's a 36%. And we can actually click through there and actually go and see the chart itself of the individual ETF. The signal came in here. We got an entry, and then Right, and we didn't get an exit signal during this up and down section of the market here until this point here.
It looks like those couple of months in that position, though, didn't gain anything after the initial rush up.
No,
but
that's true.
That's the way it is when you have exit signals or when you're using technical signals. So sometimes it just takes a while.
Right, and you know, if you wanted to develop a system like this further, what you probably look at doing is putting in some sort of trailing stop so that you could participate in this big move up here, but then you could maybe get stopped out around here. And even though this stop, if you had put a trailing stop in, you may have been stopped out down at the level of 1483, whereas the actual exit was higher at 1576. You've got to carry on.
There's another month and a half that you would have been in the trade, though.
Exactly. Yeah.
Well, also, I think on your stops, don't you have a percent from the high? So when you get a nice rush up and it comes back down, you can get stopped at that way?
Yes. Yeah. There's that possibility. You can test those kind of strategies. So the program helps you to build or design a trading system, and you can see how historically stocks have performed, and whether when you apply your system to those stocks, whether it would have been a good system or not. And that could give you some confidence going forward that it actually might work in the market conditions that you're testing in.
Okay, is there anything else you'd like to show me about this?
You know, I think we've gone through enough for this video. I think we should look at next time potentially using inverse ETFs and getting a strategy that involves inverse and regular ETFs.
Okay, so you could always be long, especially if you're in an IRA account or something like that, where you can play the inverse, and when the market rotates, you'll be long even though you're short.
Yes.
I mean, it is confusing, but
yeah, the market can be coming down. You'll have your long inverse ETF, which could be something like SDS, the inverse on the S&P 500, and that will make money even though you're long that stock. It will make money when the S&P 500 comes down.
Well, that's a good idea. Let's just plan on doing that for the next one.
Okay, that sounds right.
Would we be using a relative strength strategy for that?
We could. A number of things we could try, but relative strength might be a good one to look at.
We can try that, or we can try some indicator entries also. Okay, well, thanks, Chris.
Thanks, Ron. Bye.
Bye.